Welcome to MilliFx, where value meets opportunity.
Right, what's going on, guys? Welcome back to another video. Excited to drop this one for you guys. I'm gonna be throwing in just a little bit of stuff that's gonna help you guys. Like I said, we save a lot of stuff for paid members, but that does not mean that we're not gonna help you guys, right? Keep that in mind. So just going into what today's session kind of entailed, I'm gonna go over it and then give you guys just a little bit of sauce that we like to use. This is not, I want to say basic, but this would be more advanced liquidity movements in the market, and just being able to identify these points for your buys and sells that are going to start to portray themselves as you see these things start to happen, right? This is going to be training your eyes to really pinpoint where things are going to happen, right? So just going in now, I'll put my drawings up there in a second, but we're going to pay attention to this gap, right? So this gap here is what we call our new day opening gap, low and high. So this is where price closed in yesterday's sessions, right? Does not mean yesterday. This means after the market closed, New York closed and Asia, Sydney opened. That's a whole new day, right? Because in that part of the world, Asia, some parts of Asia and Sydney, Australia, were a day behind, right? So this is a whole new trading day, not a new day, essentially, for, you know, us living in the US or wherever you guys may be. So with that being said, we like to mark these gaps out because they are a point. They kind of give us the directive of where price is wanting to go into the next sessions, right? Meaning Asia, London, New York. So that being said, we go into these newer markets or newer days with a better bias or a clear understanding of what our bias should be, right? So with that being said, in this area here, this range of consolidation, this is going to be our Asia session. But notice how price is failing to go above this gap. Instead, we expand lower, and we talked about this expansion in yesterday's video. Or what that, I think I posted it today, but whatever. In the last video, we talked about this expansion from consolidation. So we see consolidation, and I'll mark that out. Consolidation within this range into expansion. So we consolidate and expand, but we see that price is respecting this level. We are very bullish. We're not going to try to go against this trend, but we are bullish. So we want to be looking for sells, and we want to keep that as our ultimate buy, right? So with that being said, as price pushes lower, we want to get into these sell opportunities. Now, I took one trade here and one trade down here, and I'll show you guys what basically I was looking at these areas. And this is the key points where I want you guys to pay attention. During this expansion, let's go down to the 1 minute. During this expansion, we're obviously going to see market structure shifts on the lower time frame. Now, keep in mind, when this happens on the lower time frame, the 1, 2, 3, 5, 10, 15, this does not necessarily mean that it is a break in structure to shift the overall trend. Meaning, when we swing from this high to this low and we do trade above these old highs, this does not entail a new trend trying to form or a new structure starting to get built, right? And the reason why is, if we go back to a higher time frame, we are bearish, right? We are ultimately selling down to the downside, hit sell side targets, which to the left here, which is what we would look to aim. I won't really show here, but this would be like our next objective point for price to reach. So with that being said, when we see market buy against a bearish trend, we want to look at those points as a run on liquidity. So with that basically is I have them marked out here. We see this high, price trades through this high very aggressively and sell, right? And if you got into sells here, you know, somewhere along this expansion to the downside up into this low, right? Because that's pretty much where price was trading into. We can see how we created this low just for price to come back down and take it out. So with that being said, when we expand lower after taking liquidity, this is where we're looking as an opportunity to short. This is where we want to trade. This is the conditions that we look for as smart money traders, institutional traders, or whatever you want to call it. This is understanding that market order flow and knowing that price ran this high to go lower, right? Now this was all before New York, obviously. I'm Pacific, so these times may be different than most of you people on the East Coast. This is Pacific Standard Time. This is right here at this candle 5:30. This is an hour before New York. So then we come lower and then we trade higher again. But notice we're going back up to this high, right? So we have a new high here after price traded lower. So a lot of people are like, okay, I'm gonna get into buys because we are now bullish. Not the case. This is the 1 minute time frame. It has no weight on the majority of what the market is gonna do for that day. The 1 minute does not dictate the hour. Hour dictates the 1 minute as far as overall direction. Now, like I said, we are still going to see these swings that happen against the trend, and that's for a certain reason. So we do the same thing here. We trade again above this high. We make a high, but notice how we trade aggressively through it, come right back down. And here is what we have, an inverse fair value gap. That's what we call it. Basically, a bullish fair value gap followed by a bearish fair value. So I'm looking at this and thinking, okay, I'm bearish for the day. That's my buy, so I want to look for sells. Cool. Now we see price start to form this aggressive run on liquidity, and we displace. Displace meaning we trade away from this current expansion, right? If we're looking just here, this was bullish, but then we displaced. Price went bullish to bearish, right? Matter of 3 candles on the 1 minute. So this is displacement, and we are left with what we call inverse fair value gap, meaning we have a bullish followed by a bear. And here I'm like, okay, cool, I'm looking for sells. Obviously my bias is to the downside, so I'm confident that we are going to trade lower, right? Again, using this gap that we mentioned that already pushed price lower, meaning we are going to ultimately trade for lower pricing. Targets become that new low that we created before the New York open, right? So this is now our new low. Once we trade back into this fair value gap, looking for straight sell. And the reason why is because we did get a little choppy here, but I'm confident enough that this fair value gap is going to resist price from going any further to the up. So we take these sells, boom, hit, take profit, and basically look to trade for the next, right? Now, moving on to the downside here, this trade was pretty simple, not a big one like the other one, just going for just understanding simple moves of the market. Right, we already know we're bearish. I already know I'm looking for sells. Now, do we want to hit lower pricing? And keep in mind, this trade also lied above the daily price limits, right? So as a lot of you may know, we came very, very close, within 2% of the price limit for the day. If that price limit was hit, that would initiate the circuit breakers, and trading would halt for the rest of the day until a new range of those limits would be established. Now, you guys can look this up. This doesn't happen very much, but when the market is very volatile, and we have, like, yesterday's moves went for 1,000 points, and today went for almost 300 following that. And keep in mind, just to show you guys what I'm talking about, this sell was after hours. So this was carried into a new day, meaning this is after trading hours into a new trading day. So that's why this created that new range of those price limits. So just to show you guys what I'm talking about, they won't show here, but down in this area, if price got to this area, then trading would halt for the rest of the day. Now, this didn't happen, obviously, but it also was near the end of the day where we kind of knew that this was not going to happen. This doesn't happen that often, only when the markets move crazy amount of points in one day, right? So that being said, I'm not looking for anything crazy. We know we're going lower, but I'm not trying to, get caught or get auto liquidated by trying to go into those no trade zone areas, as they call it, right? So this move, we expanded lower, price left a fair value gap. We know we're going lower from here. Price does not want to trade any higher, just judging by the reactions every time we hit this fair value gap. So we failed to trade higher. This candle tapped into it, failed to even attempt to close in the fair value gap, meaning the body of the candle, and then we came back. So on this wick here, that's where I took my entry down to this low. You see, we hit that, retraced, and went even low, right? So I hope you guys find something useful from this video. Ask any questions in the chat, but the key takeaway here is understanding what a liquidity run is versus a market structure shift. Again, 5 minute time frame, we trade above a high, sell. And I talked about this in one video before on retracements. This is just going more in depth as to what we are looking for specifically, and understand the difference between price gathering liquidity or actually shifting structure like we would see normally on higher time. For example, this run here. This is a market structure shift. This is in this day from Monday to Wednesday we were mainly bullish. Thursday going to Fridays when we're bearish. This is that shift that we're talking about. We come from swing from the upside back down. We break structure here, break structure there. So that is bullish order flow off of market structure shift that had taken place from a bearish swing. And of course, the overall trend here was just for price to go lower after we created or filled this imbalance, hit the previous new day opening gap. So again, hope you guys find this video useful. Like, comment, subscribe, join our free chat. It's always posted in the description. Make sure you join. We are answering everyone's questions, and hope to see you guys again in the next video.